Good morning and welcome to IG's early morning call on IG Live. Coming up in today's program, the Nikkei hits 36,000, Japan's main index posting an 8th straight session of gains. Meanwhile, in the currency side of things, sterling in focus, markets bracing for that inflation and retail sales reading this week. The last bit of statistics before the Bank of England decision on February the 1st. And also, the US earnings season gets into further swing. Goldman Sachs, Alcoa, and Schlumberger scheduled to report this week. Now, with 30 minutes to go until the European market open, this is how it's looking at the moment as I bring this up for you. Let's start with the FTSE first. It's looking like quite a tepid, cautious start, up slightly. Let's just have a look at the France 40 as well, and it's a similar picture there. Just widening that out for you to have a look. This is the daily picture at the moment. Let's have a look at what the score is there, up 0.25%. And checking on the Germany 40, which mirrors the DAX, and that as well is up just a touch, not by much, though, not a huge amount of conviction, it has to be said. Overnight in Asia, a slightly different picture. We're seeing quite a few big gains, especially the Nikkei soaring again by another percent. The Hang Seng, though, down slightly, about 1/3%, and the S&P this is the S&P ASX 200 rather, Australia's benchmark, is pretty much flat. Now, just taking you through the close on Wall Street, because that was also interesting by itself. The industrial average, the Dow Jones Industrials average, had a pretty interesting close, if you like, over there after mixed bank earnings. S&P 500, a similar story there as well. But I just want to show you the Wall Street, which mirrors the Dow Industrials, because that index has really confounded many investors who were caught out and thought that things might sour middle of last year. But look at that climb since October and that Santa rally. If you look here, we are seeing if the momentum continues, the continued sort of resistance at that 37,600 level. But if we break, and we're not far from it, that 37,735 rather, if we break above that, then we could potentially move higher. There's quite a bit of momentum there, as you can see. It keeps trying to track forwards. Perhaps the weekly chart will give you a better view. We are seeing what we call here quite a few inverse polarity signals, as you can see there, meaning there's quite a bit of momentum on the upside if they break through, if the chart breaks through resistance levels. Also note that on Friday, Microsoft overtook Apple as the world's biggest company by market cap. Now, it is, of course, a bank holiday in the US. It's Martin Luther King's Day. You won't be able to trade US stocks on IG platforms, but you can still trade our 24-hour indices. Now, China's central bank left medium-term policy rate, this is its medium-term policy rate, unchanged at 2.5% as it wants to avoid further depreciation of the yuan. What this means is that the loan prime rates are unlikely to change next Monday. Just bringing up the US dollar versus the yuan there for you. This cross seeing quite a lot of volatility there. Just showing you the daily chart. There you go. And it has been a weak time for the yuan of late, as all those hopes of a rebound from the Chinese economy now shifts to investors taking a more broad view that the Chinese economy will prioritize stability over any sort of economic short-term gain. So far this year, the yuan has lost around 1% against the dollar. And around 9 a.m. this morning, Germany will publish its full-year GDP growth reading. Now, this print is important because It is, of course, the world's fourth largest economy and the powerhouse, the engine of the European economy. Germany's economy is expected to have shrunk 0.3% in 2023 since the financial crisis 15 years ago, which saw the German economy shrink by 5.7% in 2008. The only contraction was in 2020, down 3.8% due to the COVID-19 pandemic. And at around 10 a.m. in the Eurozone, we also get industrial production for the month of November. Economists looking out for a 0.3% fall month on month and a 6.4% drop on an annual basis. Now, sterling also in focus this week as the market awaits economic indicators that could give us further clues on what the Bank of England will do next. Tomorrow, the unemployment rate forecast to rise by to 4.3% in November. Now, this will be the first rise in 5 months if it does come to pass. The index had remained at 4.2% since last August, and it'll be the highest rate since September 2021. On Wednesday, we have CPI growth expected to slow to 3.8% in December year on year from 3.9% the previous month. The index has been almost constantly declining since its 11.1% peak in October 2022. Core CPI growth is also forecast to fall to 4.9% year on year, its lowest level since January 2022. And on Friday, retail sales expected to fall by 0.5% in December, month on month. Now, this set of data will be closely watched by Andrew Bailey and his team, who will decide on rates on Thursday, the 1st of February. So not too long from now. And that, too, will give us a strong indication of how the UK economy is faring. It has been weak of late with inflation coming off, but still proving sticky. And we are seeing the UK property market still, they say, well, many of the UK house builders still say the outlook looks uncertain, although data does indicate a bottoming out of the slowness seen in the property market. Here's a look at cable for you. And as you can see there, we have seen quite a bit of volatility since the period starting around September, October, beginning of October, and this cross has been moving gradually towards the 12,743 mark, but we are looking out for a breakout around 12,796, and if it does break through that, then perhaps we could see a retesting of the levels last seen 13th of July or thereabouts, where it saw a high of 13,140 or thereabouts. Now, potential US rate cuts to come remain the key driver of market sentiment. How many cuts? When will they start? Being the two main questions investors are all talking about. On Wednesday, retail sales, industrial production, and to some extent, housing data will give us more clues. Retail sales forecast to rise by 0.3% in December, month on month, at the same pace as the prior month. And last month's data suggested a relatively strong start to the holiday shopping season, with the biggest rise recorded in food services and drinking places, up 1.6%, and non-store retailers up 1%. Industrial production forecast to fall by 0.1% compared to the previous month. And as for the NAHB Housing Market Index, it is expected to marginally rise to 38 for the month of January from 37 in December, which was the first month of a rise in 5. Now look out for Page Group shares at the open. Like Hayes last week, Page Group did see a deterioration in job flow through the fourth quarter. It said this morning that it saw its earner headcount fall by 17.3% since its peak in the third quarter of 2022. Just showing you the chart here. And by that peak, I mean this period over here. It said this morning it saw its earner headcount decline by 17.3% since its peak in Q3 2022. Now, Page Group shares fell last Tuesday in the wake of Hayes' profit warning. And we will be looking out for that stock for you. Now, this week, a surprisingly quiet one in terms of earnings, but a bit of relief for those of us who were quite tired by the end of last week on the earnings front. This is even though JPMorgan, Bank of America, and others kicked things off on Friday. Still, we have some huge names scheduled to report this week, starting with Goldman Sachs tomorrow. Now, the investment bank is forecast to report earnings of $4.50 a share, which should be down or would be down on the $5.47 posted 3 months ago, but substantially higher than the $3.32 from the same quarter a year ago. On the technical front, I'll pull up the Goldman Sachs share price if I may. Goldman Sachs share price has broken out of a broad descending triangle in December and has since been testing November 2022's horizontal resistance at around 391. The stock quite volatile, but ended the session on Friday down around 0.5%, just widening it out and zooming in for you. Then on Wednesday, Alcoa will report after the closing bell, the street anticipating a loss of 81 cents a share on revenues of $2.6 billion. 2023 was a tough year for the group, which only managed to publish one quarterly profit out of 4. Sales haven't improved either, range-bound all year between 2.6 billion and 2.7 billion. And despite a slight rebound in the last 3 weeks of 2023, aluminium prices remain weak most of last year, mainly driven by concerns about the real estate market in China, which led to a slower demand, from the construction sector. Now, just taking a look at Alcoa's shares here for you, it really very much reflects more or less the aluminium performance in 2023. But much of Alcoa and many of the miners, much of the stock does really, it's linked to how China's economy goes. And if China's economy starts picking up again, then you can see many of these miners also doing the same. Now, finally, on Friday, we've also got another big name stock, which is Schlumberger reporting. Now, on Friday, the market expects Schlumberger to report earnings per share of 84 cents. This can be compared with 71 cents a year ago, but the expectation is 84 cents for the EPS. Revenues expected just short of $9 billion. That would have been 1 billion higher if that number comes out and meets that target. 1 billion higher than Q4 last year. Now, one strength of the company is its international presence. The vast majority of its sales come from international contracts. In the third quarter, for example, its revenues outside the United States amounted to $6.6 billion, up 12% year on year, compared to US revenues of $1.6 billion, up only 6%. The group, therefore, is only mildly affected by the fall of US oil rigs in operation. From 620 at the beginning of last year, they're now down to 500, according to the latest Baker Hughes report released on Friday. Like for Alcoa and aluminium prices, Schlumberger shares have pretty much followed the path of WTI and Brent, at least over the last 6 months. Let's just have a look at Brent whilst we're on that as well, because so much has been happening in the oil space, not just in terms of geopolitics, but also on the supply side. Oil currently, Brent rather, 78.26. Let's have a look at WTI, which is called US crude on the platform. Currently trading at around 72.87. And that's it for now. Before letting you go, let's have a last look at the equity markets for you. And this is a look at the FTSE, indicating a slightly higher open. Same story for the Germany 40 and also the France 40. But as I said, a lot of earnings, big names, which will be the punctuating points of the week. So look out for Goldman Sachs, look out for Goldman J, and also quite a bit of economic data from the UK ahead of that Bank of England decision early February. Until then, this is Frankie speaking.